Let's start off by M&M. That was the latest number that we actually saw. In fact, we've also had the management to come and talk about it as well. The company has managed to maintain its leadership position in SUVs, in EVs, and a lot of tractor segment as well. The company has also upped their guidance when it comes to the tractor sales going forward from here as well. And they are seeing that, it's the rural push that has really led to the positive demand this time around. Although the management did categorically say that the real effect of the recent GST rationalization, GST cuts that have been taken by the government will truly get reflected in Q4 and not just Q3 as well. Once, because there is a lot of overlap. One, wedding related purchases, two, festive related purchases, and three, GST related kind of changes that have happened. So the management has clearly mentioned that once in Q4 we are done with all the festivities and the wedding season, we will clearly be able to understand what kind of an impact are we seeing on the GST cuts as well. We also have brokerages that have come out with the reports as far as M&M earnings are concerned. We have Jefferies report coming in, where they have given buy rating for M&M and a target price that they have raised to 4,300. They believe this is the 14th consecutive quarter of double-digit EBITDA growth for the company, with September quarter now delivering 23% year-on-year growth. That is 3% above their own estimates. What they've also mentioned is that for FY26, they have raised the outlook for M&M for tractors and LCVs. They now expect double-digit growth across the segments, and that's a big positive, like I had marked out earlier also. They've gained market share across SUVs, across tractors, LCVs in the recent years. They also plan to launch 3 SUVs in calendar year 2026 and a new SUV platform in calendar year 2027 as well. They've also raised the FY26 to FY28 EPS estimate by 2 to 3% as well. The management also did highlight in my interview with them that by the end of November, they are also going to be going ahead with another launch of an EV, and that will be also, they expect, will create a lot of buzz. So the launch pipeline looks strong. They are gearing up to gain market share in a lot of critical segments, and they're also looking at increasing their own estimates as far as tractor segment, LCV segment is concerned. Looking at this, what is your sense, Avinash ji, on M&M? This has been a stock that has been an outperformer also. It's been one of the best performing stocks in the auto space in the last 6 months, 1 year as well. What is your stance right now after having seen this performance in Q2?
I think, Sakshi, as you rightly pointed out, the Q2 numbers were much better than the market expectations. And I think all the divisions, if you see the UV business, the tractor business, and the new electric vehicle business, all of them have done very well. And in terms of margins also, the management has maintained the margin. So going forward, typically the second half is supposed to be a much better period for the company, as all for the automobile companies. So our sense is that even at these levels, somebody wants to take a call. The consolidated entity, which is Mahindra, which holds stakes in almost all the other companies, is obviously going to benefit. So net, I think we feel that yes, this could be a good opportunity within the auto space. In fact, within the auto space, if you look at Tata Motors, Eicher Motors, Maruti, I think this company looks very well positioned in terms of the risk reward. Our sense is that over the next, say, 12 to 15 months, one could reasonably expect a target price of around 4,000 rupees here. And I think one could even look at an SIP, because this is a business which is very stable, I think very mature. And most importantly, the management has consciously done a lot of cost cutting, a lot of productivity enhancement measures. So this actually increases the confidence from the investor. So net structurally we are positive here.
If you like the video, do like, comment, share and subscribe.